The stock market is not being moved by Wall Street alone anymore. It's being moved by group chats, trending sounds, viral memes, and people that are scrolling on TikTok at 2 in the morning. And here's the wild part. More than half of new retail investors say that they've made investment decisions based on social media. This is not coming from research or fundamentals. It's coming from somewhere else. It's actually coming from a video, a post, or even a hype cycle. That means for a lot of people, their first exposure to a stock is not a balance sheet. It's emotion. So in today's video, we're breaking down how social media is shaping the market, why that power is both exciting and dangerous, and how you can use it intelligently without getting burned. For decades, the traditional path to investing looked the same. You learned through financial advisors, you needed minimum account balances, or market insight came from financial mainstream media. I will say, that world does still exist, but it's not the main entry point. Most people are not learning how to invest through books or advisors anymore. They are learning through TikTok creators, podcasts, Instagram clips, Reddit threads, and of course, YouTube videos. On YouTube, they might watch Mark Tilbury talk about money psychology and habits. They might scroll past clips of Robert Kiyosaki warning about market crashes. They listen to long-form breakdowns by Ian Dunlap explaining what the stock market is actually doing. Every time I listen to the Earn Your Leisure or Market Mondays podcast, I always walk away with some type of real insight or perspective. And yes, some of my investment decisions actually comes from their platform. And even with Money Talks Media, I always encourage people to learn from different voices. Even though I'm a little bit biased, no single channel should be your entire strategy. Different perspectives actually sharpen your thinking. Here's the key difference though. These voices don't just inform people, they activate them. And that matters because for the first time in history, retail investors have the collective power of moving billions of dollars, sometimes overnight. All right, so let's dig into the rise of social media investing. Scroll through Reddit, TikTok, or X, you'll notice something. A single post can turn a stock into a trend. A meme can spark a buying frenzy. A 15-second clip can inspire thousands of people to buy a company they never even heard of. And it happens every day. Someone flashes a chart and says, "This is next," and watch the comments fill up with people asking what app they're using. This is not just analysis, this is momentum chasing. Recent surveys show that 60% of Gen Z and millennials use social media as their primary source of information for investing. This is not CNBC, Bloomberg, or a financial planner. Just social apps. This is the reality because information moves faster, hype moves faster, and the fear of missing out moves the fastest. Markets now react to attention long before they react to truth. You'll find this interesting, but there is a meme stock phenomenon. If you want the clearest example of this shift, look at the meme stock era. GameStop, AMC, and Bed Bath & Beyond. These companies did not explode because of earnings growth or innovation. They exploded because millions of people rallied online and collectively said, "Let's run it up." And at the center of that movement was Roaring Kitty. His posts alone were powerful enough to move the entire market. These were no earnings calls or analyst upgrades. It's just belief, coordination, and momentum. There were real stories of people that were turning thousands of dollars into six figures easily. And there were also stories of people who bought late and watched their entire savings disappear in a matter of days. Meme stocks taught us something important, that social media can move a lot of money very quickly, but at the same time, it can destroy it. This is an important piece because you need to understand the power of influencers and creators. First, let's talk about influencers. Whether you like us or not, finance creators have the real influence. That's why it's so important to understand who you follow and who you listen to online. There's 3 questions that I ask myself before I follow someone online. First is, what do they believe in? Second is, what is their long-term goal? And third is, what is their experience or background? The reason I say that is because one viral video can shift sentiment. One video can change how people view money entirely. And some creators influence what people buy. Take Alex Hormozi or Patrick Bet-David. They aren't telling people what stock to buy tomorrow, but they are reshaping how millions of people think about cash flow, ownership, and long-term wealth. Patrick, Alex, and Ian, if you're watching this video, just know, one day I will meet you. But back to how social media impacts our decision, there's a fine line between entertainment and education. And unfortunately, some creators push hype for views, and some promote assets that they already own. And let's be real, some simply just don't know what they're talking about. And if you're not careful, it's very hard to separate value from noise. That's exactly why you should ask yourself those 3 questions I talked about a minute ago. And there are countless of finance channels online, but the fact that you've genuinely taken the time to watch this one, that means a lot. Years from now, you'll see Money Talks Media being on conferences, having big interviews, and still breaking down the simple strategies that you're hearing today. And these strategies help your portfolio, your business, and your everyday wallet. And if you want to be a part of that journey, then let's stay locked in. But as always, appreciate your continued support. Let's dig right back in. The risks of following social media blindly. Here is where social investing becomes dangerous. When emotion takes over, that's where the fear of missing out hits harder than logic. People convince themselves all the time, if millions are buying, then it must be safe. But unfortunately, crowds don't manage risk. They just amplify it. That's why your Discord, Telegram, or WhatsApp group chat is not necessarily the safest for investing. That's how crashes happen. People buy on excitement and sell out of panic. But true market appreciation rewards patience and discipline. But with the social media game, it rewards speed. When you mix 2 of those without a plan, that's when you lose. I'm gonna quickly go over tools and apps that are changing the game. Robinhood, Webull, and eToro makes this easier than ever. Everything from bright colors, confetti animations, and instant buy buttons. And when investing feels like a game, people stop respecting the risk. Even though the second half of this video just helps highlight the risk, I do have a video above that talks about the best apps that you can use this year. I give a brief introduction of what these apps do and the level of difficulty so that you can make the best decision. Now let's wrap this up with the key takeaways. How to use social media wisely. Social media is not the enemy. It's just a tool. You use it to learn, spot trends, and understand market sentiment. But never, ever, ever invest off one video, even if it's Money Talks Media. I don't care how much hype or nostalgia is behind it. Always do your research. You should always understand the fundamentals, the financials, and the downside. Let social media tell you what people are excited about, not what you should buy without research. There are 3 things I want you to walk away from this video with, and here they are. Number 1, hype is not a strategy. Number 2, memes are not due diligence. And number 3, viral trends do not build long-term wealth. Education, discipline, and patience do. And if you need trusted people to follow on social media, I encourage you to follow Mark Tilbury, Robert Kiyosaki, Ian Dunlap, Alex Hormozy, and Patrick Bet-David. And also, Roaring Kitty is good too, but I've actually never been into the meme stocks. And if you want to also understand the best stocks to choose, then check out this video above. Trust me, if you're a beginner, that's fine too. But as always, appreciate your continued support. Thanks for watching, and I'll see you in the next one.